Well, I think it's an incredibly exciting time to be in the Korean market. And the analogy that we like to use is we look at, maybe where Japan was a few years ago. Korea has a lot of factors that are going for it really positively right now. You have great companies, you have great technology that's being exported all around the world at a high level. You have even cultural exports, which are becoming increasingly important and notable in different parts of the world. And then you have, married to that, you have a new commitment to sort of improving corporate governance and transparency and aligning companies with shareholder interests. That's taken the form of the Value Up Act, which is under proposal, and that's an exciting development for not only foreign investors, but also Korean investors as well. So as a foreign investor looking at Korea, you're looking at all of these positive aspects of the market, but you still have very low valuations. You have what's called the Korea discount. And we think that as corporate governance improves and as Korea continues to develop and these companies continue to do really well, we think that Korea discount is going to disappear and the market's going to take off.
There is going to be more investor-friendly reforms following the presidential election.
Well, it's not. We're not here to sort of predict short-term political outcomes, but I think both parties probably have a pretty significant interest in investor-friendly reforms, because at the end of the day, what Korean companies and what Korean politicians and what even local investors care about is they care about a market which gives an opportunity for stocks to foreign investors to participate. But basically, the shareholder-friendly reforms, governance-related reforms, can only improve the market and foreign investor interest.
Do you plan to pursue a short position in Korea or just?
No, that's not the way that we view the Korean market and the Korean opportunity. There's plenty of opportunities to short sell in the United States, and that's primarily where we're going to do that. What we're interested in Korea is we're interested on the long side. We think that Korean companies are very solid. There's profitability, there's growth, there's technological expertise, and yet there's very, very modest or cheap valuations. And that presents a wonderful opportunity in connection with sort of corporate governance improvements, increased transparency, to do well on the long side. And that's what we're interested in Korea. For example, our latest investment that we've done in Korea, the reason that we communicated that, the reason that we wrote up the report is because it sort of highlights this opportunity. Korea has a number of small mid-cap companies that are solid. They produce profits, good cash flows, solid revenue base, and a good backlog. And yet they don't receive the attention that they deserve, especially from foreign and especially from American investors, because the Korean market's traditionally been a little bit more difficult to invest in. A lot of the filings are in Korean and not in English.
Investors are curious about the report. Would you explain the content of that report?
Sure. We think that the DN Auto is a pretty unique opportunity because they have, they're about to spin out in an IPO in the Korean market their machine tools subsidiary segment called DN Solutions. DN Solutions is Korea's largest manufacturer of machine tools. It reports a solid revenue backlog. It's basically got industry-leading, almost 20% EBIT margins, which basically puts it in best in class in the APAC region. And the reason this is so unique is because this spin-out is occurring, and if the spin-out happens at a valuation which is consistent with other highly profitable machine tools companies, that is going to unlock significant value for shareholders, provided that business sort of rates and trades, in line with its other highly profitable peers. So we think of it as, what a unique opportunity with the spin-out for investors, especially foreign investors that previously may not have been aware of it, to look at a company that has a solid business, that has good profit margins, that should rate at a much higher valuation, and we expect it to actually converge with those higher valuations in connection with the spin-out.
How about the machine tool industry outlook? So is it a good time to?
Yeah, so we think it's a great time. If you look at machine tools, like everything, had a hard time during COVID, right? And I think that's one of the reasons that DN Auto's only trading at 3 times earnings historically, which is just far too low for a business that solid. If you look at what's happening in the machine tool sector, especially in the rebound, a big source of the data that we use, the independent data, is what's called the JMBTA data, which basically tracks machine tools orders in the APAC region. As we sort of cite in our report, it looks like we're having a really solid and pronounced rebound in the machine tool sector. February data shows that Korean orders were 72% up year over year. We were expecting to have a rebound in machine tools. It looks even better than people previously expected. So, how do we interpret that? We think this IPO is coming at a great time because it's sort of coinciding with a solid, pronounced rebound in the machine tool sector that investors should be excited about.
What kind of influence would DN Solution get from the tariffs?
Well, if you look at DN Auto's exposure to North America, I believe the number is about 20% of the revenue comes from North America. So they actually have a pretty diversified global customer base, which I think helps manage any type of tariff uncertainty. But look, like every company right now is probably going to be is affected by the volatility surrounding tariffs. But our view is that Korea is an important ally of the United States, and we expect long-term what's going to happen is that, look, we've already seen exemptions made for technology, we've already seen exemptions made for auto parts. Korea has very low reciprocal tariffs on the United States, so we would expect as part of this Trump renegotiation process for those tariffs to be eliminated and Korea to continue to trade at a really favorable relationship, favorable deal with the US. If DN Solutions just trades at the same multiple that other highly profitable machine tools businesses trade at, then the previous projections of a $5 to $6 trillion Korean won valuation, those look really realistic. And that is substantial unlocking of shareholder value from where we are today. Well, I mean, if you look at the valuation, when we wrote the report, it was about 3 times earnings, right? And for a business that, that is an unreasonably low valuation for a solid business which generates meaningful profits, which also generates an unlevered, we calculated an unlevered free cash flow yield of 9%. That is just understand that there's a discount, and I think part of the discount in valuation is because similar to other small and mid-cap Korean companies, foreign investors are not necessarily aware of the opportunity. Maybe they haven't been able to read the filings because they're solely in Korean. But if you look at the business and where those comps trade in other markets, well, you would expect a significant re-rating. And we think that the upcoming IPO of DN Solutions, is the catalyst in order to make that happen. Well, I mean, look, like the VMS business, they have upside to the EV supply chain. And the thing about it now is you're basically getting a free option on the battery and the VMS business with the way that it's valued right now. DN Solutions, most of the valuation is coming from the machine tools business. We don't think the valuation of the VMS or the battery business has really been, sort of fed into the valuation metric there. So, is that business going to, is that a sort of a high-tech business which demands a high growth multiple? Not really. That's not what type of business it is, right? It's part of the auto supply chain, but it's solid. It's solid. It's solid, and you're basically getting a free option of that business. And if you look at, even if it rates to sort of the baseline levels of similarly situated businesses, you're looking at a positive incremental benefit for shareholders. This is why we call the business a hidden gem, because it's something where we don't look at it as this business needs to improve. We actually look at it as they're already doing a very good job. It's just that more people need to notice what a good job that they're doing.
I think you can at least talk about sectors or like.
Yeah. Well, I mean, in terms of sectors, right? Like we think the largest disconnect, or I guess the largest Korea discount, is in the small to mid cap area. We think at the larger cap areas, there's less of a discount because those firms are very well known, and they're generally like globally recognized leaders. So, investors are more attuned to the strengths and weaknesses of businesses like that. Where we think the opportunity is in Korea is we think that there's this sector of the market or the segment of the market which is potentially smaller companies. Maybe their filings aren't necessarily, they're only published in Korean. Maybe they haven't been traditionally been on the radar of foreign investors, but they are solid businesses, and they do deserve sort of significant attention because there are changes happening in Korea that are really positive for investors. And that starts with things like value up, but that starts with a broader discussion I mean, Korean investors love American stock markets, right? So
Yeah.
like they're huge participants
Yeah,
there. And you know, there's a reason that they like participating so much is because the American market's really strong. Things have performed really well. And that's a market which has, you know, a very open, I guess, activism playing field where investors, you know, often share and sort of, you know, are free to kind of share their opinions, discuss their ideas. And I think that there's, you know, no reason why you can't bring some of that alignment and that, you know, the same incentives between activists and regular investors here to Korea. Well, I think the main comment that we have is we're very optimistic. Like we view the market, you know, we're pretty excited about the opportunities here, and you know, we hope everyone's as optimistic as we are about where we think we are in the cycle. I mean, if you look at where Japan was a few years ago, when Japan sort of undertook their own version of value up, you know, Japanese equities were also at a low valuation. There was a turning point when, you know, they committed to sort of corporate governance reform, transparency, alignment of shareholder interests, and that really started this groundswell, this fantastic momentum in their market that really pushed up valuations. They've done really well. We're excited because we view Korea in a very much the similar space that is an early, you know, to use the baseball analogy, in the early innings of something very good happening. So.